Good evening, friends. Today's my topic is how to overcome the volatile situation in the market. You all know what is volatile situation. Suddenly the market will go up and at the same speed the market will also come down. This we have seen in 2020 March. The Sensex was around 27,000. Now the Sensex is around 59,000 in a period of 1.5 years. Similarly, the Nifty was around 7,000 and above, or between 8,000 to 7,000. Now the Nifty is around 18,000 to 19,000. So you can find a change. But during this period, there are people, when the market came down because of COVID situation and the pandemic situation all over the world, they have sold their entire this thing and they have made loss. But there are also people who have taken advantage of the situation and they have not sold, they have held it to their position, or they have purchased at the lower price. Now they are reaping the gain. So how to tackle this volatile situation? This is volatile situation. Now people are asking me, now also the situation is continuing, what is the solution, sir? Yes, the solution is, I always say, the volatility is your friend. You should not be afraid of volatility. What a smart investor does, he buys at a lower price and sells at a higher this thing. So when the market is volatile, when the market goes up, normally what we do, when the market goes up, we start buying the scripts or the shares. Then when the market suddenly collapses, immediately we sell it at a loss. That is not the way to solve the volatility issue. What a smart investor will do in this situation is, when the market goes up, he will sell his holding and book profit. When the market comes down, he will acquire or buy the scripts at a lower rate. So he is able to, so volatility gives him profit. He is a smart investor. But are we smart investors? Invariably, we are not smart investors, and thereby we blame the market. We say mutual fund is not fit for investment, or share we cannot enter because of this immediate problem. So how to solve this? The solution is very, very easy. In case of equity market, be a smart investor. Buy low, sell high. When the market goes up, kindly book your profit. When the market comes down, kindly acquire your scripts. And this is a very easy solution. If you follow it, then you are a smart investor. Now you come to equity market. Equity market, the same thing is happening. There are people who are investing in mutual. You come to mutual fund market. I repeat it. Now, previously I have seen the share market. Now we will come to mutual fund market. In mutual fund market, what is happening? The same problem. When the market goes up, your NAV also will go up. When the market comes down, the NAV will come down. Suddenly you get panicky, you say the fund is not doing well. That's how to sort it out. How to sort it out. So as a result of this, many other people are not coming forward to invest in mutual fund. Now what is the solution for it? The solution is very, very simple. There are a lot of mutual funds are available. You will have to select those type of mutual fund where the volatility is taken care of. So one such fund is hybrid fund. What is hybrid fund? It is a combination of debt and equity, where rebalancing is also done periodically to see to it that the volatility does not affect the fund performance. So if you carefully, that is, go through the performance of all the hybrid funds, any fall in the market, it has not affected them. Any hike in the market, definitely they are benefited to some extent. So this is a solution. So the best solution in such cases is, whichever mutual fund they have asset allocation in both debt and equity, they are considered as hybrid fund. There the volatility in the market will not affect such funds. One such fund I can say is Balanced Advantage Fund. Very, very important. Here the name itself suggests, any balanced advantage fund will have a combination of debt and equity. They will also rebalancing it periodically depending on the market condition. That is very important. So as a result of it, your funds are safe, your returns are also reasonable. So this is the best method. This is the best method of sorting out your volatility. So because of volatile market, don't go away don't go away from the market. Definitely you should invest. Take the advice of your advisor or the distributor, and they will guide you. Now, in balanced advantage fund, I have told you it's very safe. It guards against market volatility. Now I will recommend one such fund in that where you can safely invest. Tomorrow, 8th October, NJ India, they are coming out with their Balanced Advantage Fund. The name is called NJ Balanced Advantage Fund. Tomorrow it is opening. That NFO is new fund offer is opening, and it is closing on 22nd. So that is also the same category of Balanced Advantage Fund. The volatility will not affect the fund because of the combination of equity and debt. I have discussed about this fund in my previous video. Still, in a nutshell, I can tell you this fund has a combination of both equity and debt. Equity in the combination of equity around 65% and debt around 35%. When the market goes up, this equity level 65% will be reduced to 15%, and the 50% will be in arbitrage fund. I have also told you about arbitrage fund. It is nothing but buying it from the cash market and selling it in the derivative market or future market, and vice versa. So as a result of it, no loss is incurred. So safe. And not only that, when the market goes up or down, when the market is volatile up or down, they will also rebalance the asset classes, that is increasing the equity or decreasing the equity or increasing the debt, as the case may be. So as a result of it, the problem of volatility is very much solved by investing in such funds. That is what I have given you. What is volatility? I have also explained to you as to how to come out of this volatile situation. Now, tomorrow this NFO is getting opened. That is, I again repeat, NJ Balanced Advantage Fund. Tomorrow it is getting opened. So all new investors who are all new to this market, definitely they can, who have got a fear on mutual fund about volatility, definitely they can invest such funds because of the combination of equity and debt. Now what I will tell you, my suggestion is, you out of your total investment, take only 10% or 20%, and say for example your investment of 50 lakhs, 10%, 5 lakhs. 5 lakhs you invest in such fund. There will not be any, watch for 1 year. If the performance is really good, it is going on, just activate it and carry on with your other fund, mutual fund investment. Similarly, for existing investors, what my suggestion is, don't worry about this volatile situation. Invest in this fund, that is NJ Balanced Advantage Fund, where your existing portfolio, you review it. Those funds which are not doing well, you can substitute it with this Balanced Advantage Fund, or overall portfolio you review it. Suppose if you are investment in totally in equity category, try to reduce it and try to invest in such funds also where there is a combination of both equity and debt. In this way, you can definitely grow your wealth and also earn more income. As I have already told you in all my videos, mutual fund investments are always long term. That you should always understand, and you should not be worried about your volatility in the market. These schemes are also available. So volatility is not your enemy. Volatility is your friend. If you treat the volatility in the right way that I have explained, you will definitely earn profit. This is what I just conclude this session. Kindly go to your advisors and distributors. They will advise you properly. If you do not have such facility, kindly come to me, Subramanian, 9787552042. 9787552042. Now I will end this lecture, and don't forget to press the subscription button so that more and more videos I will give it to you. Thank you very much. Good day. Goodbye.